Okay, good morning, everybody. Hope everyone's okay. Hope everyone is good. Again, apologies for quite a bit earlier than we usually do these, but it is half term and obviously got to do some parenting at some stage. So, we're just going to really just focus mainly on the charts today. Just try and have a little look at what's going on. I don't think big picture much has really changed from what we talked about on Tuesday, which kind of hadn't really changed from what we talked about last week. I get that. And we're just kind of sort of building and moving out to the right hand side, waiting for this next move. And the question is which or what is the next move? What are we doing? Where are we going? And I suppose ultimately, if we are going down, how far can we go? So we're going to try and explore some of those there. For those of you that are watching the recording when it goes out, or a bit later on, nothing that we're going to talk about today is, within the next 5 minutes kind of stuff. So it's no problem should that be the case. Anyway, let's have a look at some things on the 3-day time frame here. Sorry, I was just moving stuff around on the other screen. And we can sort of, I'll blow it up a bit bigger actually, but we've got Bitcoin. I appreciate I changed the color of some of these lines, but again, all we've really been doing is just consolidating sideways. We had that move down to, well, it was actually ever so slightly below 66,000. Which is a level we kind of talk about we don't want to lose. And we've had a decent enough reaction from that. I mean, we're up 1.2K today. Markets aren't open yet. So let's just give ourselves a little bit of breathing room. But the reality of it is we're just ranging between that 64,000 and 72,000. We've not really been able to break from that one. We will come obviously Bitcoin a bit more detail there, but I don't think that this really telling us too much. Same with the Bitcoin dominance. We had that drop back down. I'm still not really too sure that Bitcoin fell that hard against alts, but anyway, it did. And we're within that range. We haven't broken 60. We've not lost 58. We're just working within it. We're back up at 59, moving sideways once again. Don't worry, Anita. We will have a look at USD GDP. My charts are GDP USD. Just to whatever your mind says, you're gonna have to flip it. But we'll go through those. No problem whatsoever. Total market cap. I suppose this is looking a little bit different to, sorry, this is total too, a little bit different to Bitcoin in the sense that Bitcoin is just moving horizontally. We're in a range, whereas total market cap, we actually have that sort of upwards compression, which is not something we really want to see, potentially a forecast of where we're going. And there's an argument to be made that maybe we're starting to see it break. But either way, it's not moving sideways. It's moving in a channel, in an upwards channel, in a falling market. Typically, that seems to suggest that it may be a precursor to further falling. Obviously, though, it could just be the right-hand side of a W formation, which is why we don't really act on these things until we lose that level there. That level really is going to be around about, with just under 900 billion is what we'd kind of be looking for. But right now, obviously, cautious with where that is. I'm not in any alts at the moment. And so we've got that to consider. And then we've got BitTensor. And after BitTensor's fairly decent recovery over the last sort of 7 days, I think it was up around about 35%. We are seeing that sort of rejection, whatever you want to call it, pullback from there. And for me, the coincidence is, we get all the way back up to 215, the base of this previous level, and then the sellers start to step in, and we're starting to see this roll over a little bit here. And I'll be honest, particularly seeing what we've just seen with Total 2, my bigger picture outlook is probably a move at least back down to retest this level, round about that 150, and then we'll see where it goes. I am going to talk a little bit later on about where we are in terms of just sentiment and the amount of downwards we have. I do believe at some stage we're going to get some sort of relief rally. I think that's going to really sucker a lot of people in. That final sort of, right, that was the bottom, this is it, we're all going back to the moon. Personally, I believe this will just be a relief rally. We'll have a look at some levels on where Bitcoin could be. And potentially it could be March as the month that sort of leads into. March maybe going towards sort of April and May, tying in with that sell in May, go away type of mentality. And so obviously altcoins generally should follow suit. Maybe not as strongly. Maybe some will be much stronger. But we do see that. And I'll be honest with you, how I play that, I haven't quite decided yet. Part of me thinks I should at least put something back in the market if we see some positive move forward. and try and ride that up as best we can. But we'll keep that going as we, well, just in the back of our minds as we sort of review the charts and make a decision. Of course, I'll let people know what it is that we're doing there. I'm just going to move off these charts. We'll go to see, ones that give us a little bit clearer of a picture, and we'll come back into all of the alts that we're interested in back at the end. But we're now on Bitcoin, and we're on the 12-hour time frame. The reason, it's always the 12-hour time frame we do with this one, because we're looking at liquidation zones, and we're also looking at the fibs. But I've actually put onto the EMAs for the last couple of weeks, because what I have noticed over the last week or so is, excuse me, I'll just double check. I think it's the 20. I need to check. I've also got fog in my throat now. Just gonna 21 it is. I'm just gonna mute while that's a bit better. You can actually see 2021 EMA really just holding back price right now. And whilst we have had a positive 24 hours from the lows of around about 66, we've got to get above, what is it? Let's just say it's 68,600. So another $500 or so. And we really need to start building from that one. And we can kind of see, even when we do, we got that move to the top of the range that we're in, 72. Still we're on the cards before the 50 EMA catches us. And so for me, there's still that work to do. And right now, until we break those levels, which, as I said, 64 to 72, I'm just ranging. I think I'm just going to sit on my hands and just trade as best I can within that range. But we can at least see some sort of pattern emerging in terms of the 12 EMA holding us back right now. So until that breaks, 21 EMA on the 12-hour time frame, I'm not necessarily too interested. And then we can also see down here, we've got the 618, which is what we cleanly bounced from. Nice to see. But we've got this build up right now of a liquidation zone for those that did go long and weren't blindsided by the fear, building in around that 60K level. And my view is still a retest, even if we are going to move up for a relief rally, a retest back down to try and have a look at these lows at around about 60,000. Whether or not it wicks through and tries to take out this sort of long leverage area, we'll have to wait and see. But sort of a move back down here, and then if it is a relief, I'd expect a sharp move back down, W formation, whatever you want to call it, and a move back up. But that's certainly where we're looking at from there. I mentioned about fear and greed. We are just blood red at the moment, single digits. It's been single digits for an immense amount of time. This is on the yearly. And you can just see that pretty much the last 6 months, we have been sub 20, except for one rally, or sub 30 at least, except for one rally. And if we move it on to the 3-month chart, you can just kind of really see just how difficult a period this has been. I don't think I'm really saying anything new necessarily here, but it just giving that sentiment. And I think a relief rally is the shock play, if I'm being perfectly honest. I think people have now got numb to sort of the levels we're at. And let's not kid ourselves, 68,000, they were the highs from the last cycle. And that's now where we are at our most fearful. So it's something is screaming to me that, all of this downward pressure for the last 6 months, this negative sentiment, outflows just continuing and continuing. The absolute best trap that could be played right now is a relief rally. It's going to catch people off guard. People will be slow to react to it. They'll finally concede, saying, actually, we've cleared some levels and the bull market is back on, only for the legs to be taken out of them. And let me just bring it up. But you've seen me display it enough times now. Not that one. Sorry, I wasn't ready for it. Keep going. Put it on the weekly. But if we are going to, going to the next phases, the next phase for me would be denial that things are coming back, and that requires a pullback up, and then the legs get taken out, and that's when even the diamond hands start to suffer as everyone starts to think it's time to get out. So I think that's just something to bear in mind there going through. We'll try and have a look at that in a bit more detail next week. I want to go back to, it's going to take forever. I want to go back to this blank chart that I was having, because using this chart, we've obviously got this fib on here. And for those of you that remember here long enough, the fib's based on the price action from effectively this 6-month period in 2024. And it's worked great for us in terms of just sort of giving us angles and ideas of where price action is going. But actually, having a bit of a think about it this morning, if we are saying the top is in, there's actually probably an opportunity for us to redraw another fib. I'm going to keep it on a separate chart, but I'm just having a look at where we're going. And what I'm looking at here is, let's just get rid of these EMAs. Don't need those. Price action. Oops. Why is that doing this to me? Come on. Yeah, price action from the bottom to the top and just see actually what the fibs are drawing out. Now, before we draw that, I then had a thought. Where did the fib extensions get to? So if we go from the previous peak to 69,000, 2021, down to the bear market lows in 2022, and we pulled that across, I mean, there's going to be people that say it didn't quite hit it, but I tell you what, 128,500, we got 126,500. It's 2,000. It's less than 2% away in terms of a margin of error. It's not actually that bad, and you can see this fib, it kind of works quite well. You know, generally we saw price, it's on the weekly time frame. You've got to give it a little bit of room, but you can kind of see price action just sort of working its way up within these levels quite nicely. I didn't get back down to the bottom there, and then, you know, up, and then we find ourselves at the moment in a bit of a sticking ground at the previous all-time high that I mentioned. So I actually think big picture stuff, that worked out quite well. Now, yeah, nobody was really looking at 128,500 because we were all thinking we're going to get a bit higher. 175, 310 people were talking about, well, 300,000 people were talking about. So I get it, but actually maybe some of the clues were there. The reason I mentioned that is because, well, maybe we need to do the same and put some of these clues on our charts now, and we can actually run this out from the bottom. So I'm going to draw it 4 ways. You can then decide which one you want to use. So I'm going to do wick to wick, body to body on both log and linear. Okay. I'm typically body to body, but I accept that this is actually over a 4-year period here, and maybe, or a 3-year period, maybe just trying to get the full market as a way to do it. So if we go wick down at the bottom to the wick at the top, and what we're now looking for is where can we actually see some levels. So this 77,200 worked quite nicely in terms of these flows back down here, this point, and then maybe it's given us some idea of, actually, we've got 56,000, 44,000, interestingly ties in with basically the ETF launch, and then, God forbid, the 618, it's actually down at 35,000. So certainly something to consider there. I'm just going to leave these marks on the side. It shouldn't change too much going body to body just because the wicks weren't that large, but we will now redraw it just body to body. It's on the weekly time frame, so bear with me with it. You could draw it a lot more accurately on linear. So we got, instead of 34, we got 35. We got the high 44s down 56. So fairly similar. Everything's kind of looking the same, and I wasn't expecting anything too different. The wicks aren't that far apart. Now, if we just flick it onto log, we actually don't have to move it. But interestingly enough, just get rid of these on the right hand side. Still kind of works on the way up, I think. Certainly some action in and around the golden areas. But what I do find quite interesting is actually the 618 is at 57. It's an area that we always think we're going to come back to. Golden ratio, it gets its reputation for that, but it's at a much higher level, 57,000. Now, it doesn't necessarily mean it's the bottom, but the only other one that we'd really be looking at then is 40,000, which again, that was the price of Bitcoin at the launch of the ETFs. And for me, in terms of like, you know, full circle journey, institutional bull run, taking it back to the bear market lows, just basically institution getting back to zero, it feels very poetic. Not poetic, because that makes it sound like something I'm rooting for, but it certainly seems like a storytelling ending in terms of where we could find the low. at 40,000. So I wouldn't necessarily rule that out. Now, for me personally, I'm a logarithmic person, so I'm going to throw that back on, and I would actually be looking, down at these two here. It's potential areas for the base, but we can do a little bit better than that, because we know there are elements that we can throw in to try and get an idea of areas of interest. And if we have a look at the unrecovered imbalance zones, the vector zones that we kind of talk about, we can see it now. Weekly, it's a bit difficult, but there is what, excuse me, below the 618, but we're now starting to talk about low 30s. But I'm more sort of interested, I suppose, on the daily in terms of where we can have a look at some of these. That. And I know it's difficult to necessarily see, but we're just kind of looking at these green zones. And what I do find quite interesting are these green zones here, in and around that 44,000. And suddenly, so we've got a vector candle. Sorry, we've got the fibs that takes down to 44, sort of a mean area to aim for. Within that zone, from 47 down to 44 dead, we've got a couple of vectors. And then we've also got another vector zone down here at potentially 41,000, which takes that low, tying in with the 40,000, I suppose there. An argument could be made that maybe actually for real capitulation right at the end, you get a little wick down and you get the 618. There's no vector necessarily to tie with it. But I can't tell you where the bottom is going to be, but we can certainly have a look at some of these bigger picture levels. I'm going to leave this fib on this chart and we can just sort of monitor where it goes. But I have to say, just mark them up. That is areas that I would be looking at. What happens if and when we get to 56,000? We can't turn it around there. You can probably hold up and wait to see. And it's time. It's not going to happen overnight, but to the next one, just see how it reacts in between the 382 and the 0.5, and down at 45,000. And then again, 45 doesn't hold. I think there's certainly an argument to think, well, we may get a flash stink bid, put a stink bid for Bitcoin in and around 36, 37,000 in case we wick down, and just monitor where some of these vectors are. And I think that's big picture how I want to play it. Like on the other side of things, 70, I mean, we're talking about 72,000, but 76 has a draw to it. We can break 72. I think 76 is an ideal area for it to retest. And we break that. I appreciate I'm going to move away from the fibs here, but my theory for the relief rally would be in and around 80,000 back to this base here before it ultimately ends up rolling over. But the 76 would be a good indication. I'm going to take an indicator before that in and around that sort of 72, 73 level. But I think just from if you're someone who just wants to work with fibs, using the 76 there could be an area for us to look at. So that's kind of where I sort of see the big picture, and I think with something for us to monitor. Let's just hit save on this now, so I remember to save it. And we'll just see where this sort of lines up in, 6 months' time or so. But there'll be some who obviously dread some of these numbers, and there'll be those that are almost salivating at the thought of some of these numbers. I'm probably in that latter camp, I'll be honest. I'd love for it to drop down to 35. I honestly would. I appreciate that's going to hurt a lot of other people, but if I can, utilize what I have on the sidelines and get it at a lower price, then of course I'm going to take that. So yeah. Now let's get rid of this. I've saved it, but let's get rid of this, and then let's also get rid of that. Bring this back up so at least we can see what's happening with everything else. And the reason I'm kind of sort of drawing this at the moment, we're back on the daily, but I've tried to keep it as clean as we possibly can. And I suppose the thought I've got right now is we're ranging sideways. We talked about that on the 3-day time frame. And we kind of see that 66 level that we talked about, 66,200, I think was the actual level we talked about on Tuesday, forming this bottom here. And since then, we've had a bit of a positive bounce. And although it's not mirroring what's going on here, there's a bit of a sentiment at the moment that we are just kind of like stabilizing ourselves out for whatever the next move can be. And so I do see a move maybe up to 69,000, you keep within this range, but nothing would surprise me if actually that 72, we keep working towards that 70s and we start to just build up a bit like what we had. And don't forget, this was over a 2.5 month period. We've only done this for 2 weeks now. Start to just build sideways. It will help build, help rebalance the fear and greed element, which is kind of what we saw over that period before it then rolled over. And the irony is, it was 98,000, the rejection of the 50 EMA and the 20 EMA on the weekly time frame that took us back up to 61 before we rolled over, because people were just, we were so threaders with, well, not threaders, poor choice of words. We were so numbed to price action here that any slight movement up, we absolutely skyrocketed. And, ultimately from 11 all the way up to 60 in a matter of weeks, just because we would take any lift in the price. And I feel that that is a similar kind of experience we're going through right now with just where we're at. So I can foresee this moving sideways. And I think if what we, as I say, what we see, we suddenly move ourselves into March and we get a little bit of a higher move up, and then we start to see that roll over. That's just how there's no science necessarily behind that. I just kind of get the indication of just where price has been, and ultimately, I suppose, where sentiment is, that actually the worst thing that could possibly happen to us right now is that sharp move back up, convince people it's time to move, and then a rejection from it. And doesn't sort of, it's dropped a bit since Tuesday, where it was a flat bang 80,000, which was kind of the base of this level. That 50 EMA, pretty much at the 80k level, smack bang with where we found price action to bottom in the drop in November. There's some sort of alignment there, which makes a lot of sense to me for where price could go. So I think that's something that big picture again, just to be mindful for. And I did see some of the comments, particularly after the cuddle and some of the videos that people have got out, and that that's, if that's right for your risk management, absolutely. I definitely have caveated it a number of times with, don't immediately leave, look for an exit. If that's the exit you were looking for, I got no problems with it. But don't crap the bed now if price starts to move up. Act with it. Know that we have been on a downward trajectory for quite a significant amount of time. RSI is oversold on some of the higher time frames. Relief rallies are expected. So just bear that one in mind in terms of managing any emotions when price goes forward. And then we've got Bitcoin with just the usual on the weekly time frame here, but just with the usual indicators that I have. And there's two things really to have a look at here. So just going off what we were mentioning, sentiment at the moment, RSI weekly, we are sub 30. Technically, we are oversold. Definitely some alarm bells there, but we can stay in this. It's weekly, so we can stay down here for some time without it necessarily being a problem. But what is interesting is now the 200 weekly EMA. Long are the days where we never even talked about the 200 weekly EMA because it was so far below us. It wasn't anything to concern ourselves with. We were more focused on the 50 EMA. Now the 200 EMA is smack bang in our face. And we're doing a decent enough job at the moment of using it as support. The only issue we have, is we've seen this before. Remember with the 100 EMA, we used it as the base of our range as we ranged sideways. And I talk about a lot of things happening, similar to the previous side and why I can see it. So now that 200, just using it as a base, still having the opportunity to flare up and start to see some movements here. And if it takes a long time, maybe the 50 on the weekly does come down to, at the moment it's at 93. Maybe it does get its way down to 85, somewhere to the base here where we can really see a sharp move up, get people truly excited. But I am just seeing right now that the 200 EMA is in play, and we've just got to keep an eye on it. And I suppose for those of you that are still on the fence about what to do, what do we say around major support and resistance? Now's not the time to actually to act. Now's the time to be watching vigilantly of whether or not we actually lose it or bounce from it, because you might as well wait for confirmation one way or another before you decide to do something, given exactly where we are. And there's even weekly timeframes, they don't often form, but there's a pretty tasty vector candle just above us right now. But mentioned on Tuesday, we are just generally sloping down. Yes, the weekly is holding us. So I want to see how this thing closes. I hate to say I want to wait for a couple of closes below because you know how that caught us out beforehand. But probably should in all reality. Let's drop it down onto the daily. Excuse me. And we're starting to see that picture. There you go. 10 EMA here, not the 21, but really holding us back. Similar to the 12 hour, that's going to make sense given that it's half the duration. But this is holding us down here, and that strong move that we've had today is taking us right up into it. It's a Friday, maybe going into weekend, we might actually see that move up to the 20. We haven't hit the 20 in some time. But even if we get up to the 20 EMA, it's still below that 72 threshold that I'm looking for to make some sort of positive action from that. In terms of the RSI, I mean, we're just back into neutral territory now, so it's anyone's kind of game. People argue, well, it's still sub 40, so it's kind of on the low side. I don't care. If it's in the blue zone, it's neutral. It can do what it wants. I don't think it's a bearish divergence, a bullish divergence, sorry. It's prices, I think it's moving sideways, and this is kind of slowly moving up. Maybe it is a tiny, yeah, this is going up. This is so far, I mean, this is slightly higher though, but this is ever so slightly going down. I don't know. It's right on the brink for whether or not there's a bullish divergence here. I don't think it's enough to get me really excited about it, if I'm being honest, but it's certainly there. In terms of the EMAs, I mean, we're pretty much all trending down now. Even the 800 has started to turn. And we fanned out quite nicely with those. So not looking great, but we haven't hit the 50 EMA. Well, we don't need to, but we've got the room to get up to it. And as I say, that move up to that 80,000 level, it's going to feel great. But ultimately, we're just going to run headstrong right into one of the biggest resistors for the 50 EMA. So just be cautious if we move up. I think that's the narrative here, is just be cautious of any move up. I think we're in the 4-year cycle. That's my view. And so we are now in that stage where moves up are not to be trusted. Maybe to be taken advantage of, but they're not to be trusted. And I'll happily be proven wrong on that one, but that's where it sits. 4-hour time frame. I don't think there's too much more to be told. We're moving sideways, running into the 50. The 50 cloud has not been defeated this month. So again, we may have a little bit more wiggle room to sort of maybe the top of 68,000, but there's not much there. The RSI is kind of painting the picture. And there's not too many vectors in and around. We've got to really clear, into that 74 range before we start to see anything, because we know when we start ranging, we leave no vector uncovered. And so there is an argument to say 70,000 is a vector there, but also another one says 66 is a vector there. So, yeah. What was it called yesterday? Non-volatile. I can't remember what it was Simon was talking about, but non-volatile sort of movement. It's kind of what this is at a much smaller time frame. We're just not really achieving much with the direction we're going, which is typical for just nobody knows where the next move is going to be. So we're just going to move in a very unnatural but not too alarming movement until we get that decision. And maybe it is a world event. I tried not to talk too much about the news, but maybe something like Trump waiting for the weekend and then deciding to just go and deliver some American justice to Iran. I mean, the markets won't really feel it because they'll be closed, but crypto may. We know we like to choose weekends normally, so maybe it's something like that. Might be just why everyone is waiting for some sort of decision on. But we can only act with the market of what's going to happen. I imagine the initial, if a full-on outbreak occurred, the initial reaction would be fairly negative. But let's not speculate too much on that one. I don't think we need to go on any lower time frame there. Let's move on to BitTensor daily time frame. And I don't really see anything particularly exciting about it. I'm sorry that I sound like a broken record there, but now we're on the daily, you can kind of see, yeah, that move up. But what did we run into the 50 EMA? We've rejected from it fairly convincingly. And on that way down, we have recovered a vector, this green vector candle. This green vector candle. And we've also now found ourselves below the 20 and the 10 EMA. And so for me, the next logical place for us to catch ourselves is at 150. And if we catch ourselves beforehand because we hit one of these previous levels, the 162, whatever, fine, but close enough that we're sort of edging our way down there. And then we've got to look at, well, what's the overall narrative? Sorry if you can hear my kids shouting in the background. Is we're just trending downwards. It's lower lows and lower highs all the way down, whether you want to look on the bigger picture or down on the sort of smaller last month or so. And so that is it. And I think even yesterday we were talking about dead cat bounces and the reality of this move down here. Okay, it was a $50 move up. So when the base breaches, you think it's going to be another $50 move back down. That's going to pretty much take you to the $100 level. Now, again, I'm not in the ecosystem to know if miners are going to go dormant sub 150 or if it's 100 or whatever. To me, I'm not fussed about that. But just from a, pattern repeating, what have we really got holding us up? Except for 150, we've got a little bit of clout here, which is down as low as 130. And then after that, it is $90. That from price action, if you're a TA person, from price action, that's where you're looking. This line here, we had a double bottom out of it, a fairly decent waistline forming. That's it. We've got a couple of vectors to help take it down on the road. 90K, wow. $90 is where I'd be looking. So that loss of that 150 level is what I'll be seeing. And I hate to say it, but it is not giving me any conclusion that this trend that's been going on for 2 years has broken. We are continuing with lower lows and lower highs. Now, I accept. It would be great to see it rally up there, and you can be assured if BitTensor makes a sharp move north, I'm getting back in, and I'll try and ride the wave as best I can. And it's happened, particularly at these lows. We have seen bounces from it, but I have to see it. I have to actually see that trigger happen, and then I'll try and jump on board with it. And even if it does, how far is it going to go? Well, we'll leave that there. So I don't have a particularly positive outlook on where this is going. I have no idea about alpha, that. So if you're in alpha and it's providing you with at least some sort of bandage to the bleeding, then keep on with it. In terms, in terms of the 4-hour time frame, again, those moves up. Let's get rid of this one. It's confusing. Move up to 200, rejected us straight away. Now we're back down below the 50, and we know. We like to collect our vectors, and there's a vector all the way down to 157. That's what I'd be expecting price to come down to as a minimum. If it turned at 157, I'd class that as finding its bottom back at 150. It's close enough from that point of view. So yeah, that's what I'm kind of expecting, is just to bleed in down to here, RSI to come back down, and then we may just continue a little bit more of a range, but we've got to break that high. We've got to get back above 200, haven't we? Okay. Back onto the daily. Pippin's having a little bit of a tumble. I'm in a short at the moment. An alert here for 40 cents, which I'm going to try and get out of. But it had that stellar move up, and this one was defying the market. So I don't think many people in RT are in it. I know Reese is quite active, at least in following it. I'm not sure where his position currently sits at the moment. But yeah, I can see a pullback, almost a 50% pullback, tying in with the 50 EMA, just as the markets from this did seem very overbought, even on the daily. Go down the lower time frames, it's kind of working that way there. So that's the only trade I got open at the moment, but we're just watching that one as it goes down and through. In terms of some of the others, I mean, Sam went through these yesterday, and I went through them on Tuesday. Most other alts, we're just not looking particularly strong at the moment. It's kind of what you'd expect in terms of 5-6 months into a bear market. The weakness is starting to show, and I'm of the different opinion where I get it that a good project, we'll say that, with a decent enough runway that can work through a bear market, and still deliver on fundamentals, still improve the technology, still improve the ecosystem, whatever, is going to be in a much better position come the next bull market. I get that. But I don't think fundamentals count for anything until the market shifts. So yes, BitTensor, I believe it probably has a big enough runway. It has a big enough critical mass to survive through the bear market. And if it can continue to make positive developments, then when we get into a bull market, it stands a chance. It's not a foregone conclusion, but it stands a chance to make recoveries during that. Absolutely. But we've seen, the likes of Polkadot, the likes of Near, the likes of Link, ADA, which have a runway, which, maybe not ADA, but certainly those other ones had made strong developments during the previous bear market and just didn't really get to capitalize in this next or the previous bull run we've just had. And so it's really just a case of we can hold on to those fundamentals, but I would much rather be driven by TA going through, and fundamentals may help kick. But right now in a bear market, positive fundamentals are not going to help. Negative fundamentals, they could be damaging, but generally they probably don't even sway too much either. But that being said, we just go through some of these here. Even Solana looking down, SPX, XRP, Zcash. I mean, the thing about Zcash and I suppose Monero, maybe not Monero now, but certainly Zcash and Pippin, they both had such stellar runs that even the pullbacks we've been seeing, still putting them in a much better position than where they were 6 months ago. So they are the outliers that we occasionally see, and a good example of outliers. But the rest generally just following with what the market unfortunately is doing, and we're just moving down that way. And there's no, in my opinion, real point to thoroughly investigate alts, with maybe the exception of Ethereum. But right now, Ethereum is looking almost identical to how Bitcoin is doing. Again, sentiment ever so slightly out of oversold, but pretty close to it. And generally moving down. And I think the next leg down, or if a down occurs for the crypto market, we will be seeing sub 1,500. We'll be getting close to the 1,300 level for Ethereum. And suddenly, the questions are, well, at what stage can Ethereum be a good buy again? Can we get back into 3 figures? Can we retest the lows that we saw back in late? Well, actually, it was kind of mid 2022 when they announced the change from proof of work to proof of stake. Yeah, potentially. But this just goes to show that, because you haven't made a genuinely decent new all-time high in this bull run, you can absolutely lose all of your gains and then some, because we normally expect 90% of its value to be lost, not the previous gain. So if you didn't really make much more, then I think we can expect to see, Ethereum coming close to those 3-digit levels. Absolutely. In terms of just some of the other metrics, I know we've got to talk about the pound versus the dollar in a second. ETH BTC sliding down, total 2 without stables, again, all sliding down. Others versus Bitcoin, okay, a little bit of an uplift. Nothing huge though compared to just generally how it's done. Others dominance. Others, that's the one I was wanting. When we put this on the weekly, I need to tidy this up. There's too many indicators. This is everything outside of the top 10. It's just, we have broken major levels there. Major, 2021 run up, even the big drops in 2022. We've now lost this, and if you want to have a look at generally what's the levels on, we'll try and put as many as we can on that line there. So 150 billion. Okay, I'll give you one there just because of those wicks too, and this top. This one down here. This one. I'll put the bottom at 72 billion. It's almost nothing, isn't it, really? So yeah, we've lost this major level. Let's just make this a little bit more definitive. We've now lost this level, and the case is, where can we catch it? And when we start to see the depths of this going, you know, I think altcoins are really going to bleed, and I feel like a broken record, but we're not in 2021, 22 anymore. There are not 21,000 altcoins. There were 30 odd million altcoins. So that same amount of money that's been flushing around is just spread over so many others. This is gonna, it's gonna bleed hard, I believe. And so I would expect it down to the sort of 100 billion level. I think we get down to minimum this noise here. But I think there's an argument to be had that we actually go down there. Remember, this is outside of the top 10. So the likes of Ethereum and Solana, which have ETFs and institutional money at least a little bit behind them, that's not included here. So yeah. Right, daily, get off this one. I just want to, so it needs to ask me about pound GTP. It's kind of like a very direct question, I suppose, in terms of you've made the sidestep, you're now in dollars, and you're looking to try and find an ideal time to get out of dollars into pounds, and as I understand it, to try and recover some of your losses. And I suppose, big picture, looking at this chart, this is not a good time to be getting out. So it's £1. No, it's $1.35 for every pound. Okay, you want to get that much closer to parity so that you are, because at the moment you have to spend more dollars just to accumulate pounds than perhaps where we were a year ago. Beginning of 2025, we were down at 120. So it's not necessarily ideal in my mind. But I suppose the real question is, how have you started doing the sums? I mean, how much are you trying to recover from your loss, and is it necessarily worth it? And I appreciate you putting your comment that you've never necessarily had a problem getting fiat into the crypto system in the past. But how much have you tried of that recently, in terms of clamping down over the last 2 years, versus how much you're really going to benefit by waiting however long it may take to get back down? If we put this on the monthly, let's just get rid of this as well. I should have just had it on a clean chart. But if you have a look on the monthly, to get it back down to parity, we did have that back in 2022. That was 3 years ago. If you were to wait, and we were at a similar level, and we sort of cascaded down, and it basically took 18 months for it to go from where we are now to a really low level. In 18 months' time, you might actually be wanting to put the money back in. So it's all about just trying to balance that. And only you can answer it in terms of, if you were to convert it and you were trying to make some sort of decent recovery in terms of selling while the dollar's weak into a strong pound, and then being able to flip that back from pounds into dollars when it's vice versa again, so you can benefit from uplift. How much are you really going to do? Even if you just spitball some numbers and went, right, well, from a percentage point of view of my portfolio, how well is that going to do? Versus a time it may take. And we have no guarantee. We know, I mentioned this on Tuesday, we know Trump wants a strong dollar. I've seen Walsh talk about the fact that he wants a strong dollar. And so there may be factors outside of what the US can control in terms of how valuable the dollar is perceived to be, and carry trade unwind and all of that kind of stuff I completely get. But it's the time, isn't it? If you are someone that believes that a 4-year cycle is the thing, you've got 7 months. And so is waiting that 7 months worth the conversion? And then the difficulty in potentially getting that money back in. I can't answer that for you. But right now, as we look at it, 1.35, it's not the best time to be converting it back. You want to wait for that to come back down. I just don't know how long that's going to take. Sorry if that doesn't give you the answer you want, but hopefully it at least helps sort of try and understand it, or maybe come to a decision on that. For me, I just think in dollars with it now. It's been so long since I've moved a decent enough wedge back to the accounts. It is just dollars. And I look at, the times of big introductions of cash for me, end of 2017, during 2021. I did do in 2020 as well, so I got some down low, but generally the two times it was at probably the worst place, and then one down there as well. So I just, for me, I just don't even think of it like that. It is what it is, and if when everything comes out in the wash at the end, it happens to be a convenient time to turn dollars into pounds, then so be it. But I accept that's not a stance everybody can take. In terms of things like the VIX, recently had moved up. Starting to come back down. Still in the 20s, a lot higher than it's been recently. Maybe just off some concerns with what may be happening in the Middle East. And Nasdaq today. Oops. There we go. Sorry, I need to put some of these back on now. So daily under the 50 EMA, kind of a sort of a local-ish low from where we are. Remember, Monday, we've got NVIDIA earnings. NVIDIA basically carrying the NASDAQ for the last year and a bit. It's going to be a big one. As I mentioned on Tuesday, with AI being repriced and concerns around how it's being valued. Interesting to see how that one comes about. But even if it's a good earnings report, we've seen historically, it doesn't always translate with tech stocks right now. So something to consider. The S&P again, it's basically it is still moving upwards. I get what was being said about that non-volatile pattern or whatever the term was. I can't remember now. Distribution, whatever it was, and I get that, completely get that. And there are certainly some nervousness here, but we're still hanging in and around the top, so it's not falling away yet. And as we said, we could see a pretty big correction down to the 200 EMA, and it still actually be pretty decent. Gold is starting to just make a steady climb up. It's been a bit more gold-like in terms of its movement than what we saw in January, but silver's climbing quite nicely. We've got some of these others, which are just generally all moving. Well, NVIDIA's sideways, probably waiting for next week. Circle obviously trending down. Palantir has been moving down. Tesla's at the bottom, but it's bounced off that 200 EMA. Coinbase down, Microsoft down, MicroStrategy, I still would say that's generally down. It's not done much. It did have a decent bounce, but Astrid's kind of holding its own at the moment. Smart Web Company just launched, but down. TauX down. Oblong Tail Weave down. Yeah, so I don't know. Try not to comment too much on these. They're just ones from a selection, not all of the ones I went through there in the pension pot, but a decent amount of those are. I've not really done much except for sell the Palantir one. I'm kind of at a level at which I sold it, to be honest. So it's kind of just chilling around, but we'll just see where that one goes. I think we'll probably knock that on the head. It's been 50 minutes, actually, a lot longer than I expected it to be. Just be mindful for Bitcoin, as I say. It's had a decent bounce from that 66, but when relatively speaking, we're still in the cauldrons at the moment. The levels we want to be looking at, nothing's changed. Break above 72 and we can hold it. We'll start talking. Loss of 64. We're going to start questioning whether or not we're going to retest that 60,000. If you want to get a bit more into the weeds, I'll be looking at around about, it's the 10 EMA on the daily or the 20 EMA on the 12 hour. They're the same. But yeah, this is the 12 hour. So we're kind of looking at around about 68,600 from there, and a base, a breach and stay below that 66,200 we talked about. So we're kind of in those levels right now. Other than that, I'm around all weekend, so feel free to message, comment, whatever. We'll be back on Tuesday night to go over some other stuff there. If you didn't catch the cuddle video, it is out, and even Simon sort of said it's a pretty decent one to go and have a look at. Just have a look of it. It's just I don't think there's anything new that I've said within it, but I think might just sort of give you a fresh perspective on perhaps where we are within the cycle, and maybe help lead to some actions there. Other than that, enjoy the rest of your weekend. Enjoy the rest of half term if you're celebrating that with your children, as we all do, obviously. And other than that, I'll speak to you all soon. Cheers now.